A very good morning and wishing you a great Thursday ahead. Welcome to today's episode of Morning Wealth. Three things that we will talk about. Oil rallies after EIA report. Salesforce plus Slack. Does it make sense? Word on ETF flows. Stocks enjoyed a day of reflection as stimulus discussions in Washington stirred to life. After a tumble in the morning, indexes did give a good try later in the day but couldn't build a meaningful rally. The Dow Jones and the S&P both climbed about 0.2% and the Nasdaq shed a fraction of a percent. Top Republican Senator Mitch McConnell said Democratic leaders had signaled a new willingness to engage in good faith, boosting hopes of a deal for consumer and business relief that could possibly be struck in the near term. Pfizer shares got more than 3% boost from the news that its vaccine with BioNTech had received UK emergency authorization. But investors are now likely looking for hard news about when the drugs might actually start to be distributed before piling further into shares. Oil rallied after EIA report showed US crude inventories fell by about 679,000 barrels last week. OPEC Plus has made some headway as well towards a deal on output cuts after days of direct negotiations between Russia, Saudi Arabia and UAE. Details of any potential compromise aren't still immediately clear, and the OPEC Plus is scheduled to meet today to iron out any differences. On the back of oil going up, the biggest winner on Wednesday were energy companies. Apache was up about 6%. Occidental Petroleum was up about 5%. At the same time, Salesforce tumbled about 8.5%. The cloud computing company on Tuesday confirmed that it had agreed to buy Slack Technologies for about $27.7 billion. The mostly cash offer values Slack at about $45.5 a share, which is about 54% premium to its unaffected price and represents a multiple of about 26 times forward sales. Remember, this is sales and not earnings. As such, Slack is Salesforce's most expensive deal by multiple measures. Its previous two big acquisitions, which is Tableau Software as well as Mule, Tableau they had bought for about $14.7 billion and Mule Software for about $5.8 billion, valued those enterprises at about 11 times and 15 times forward sales. So Salesforce investors are understandably uneasy. The stock has almost dropped about 7% since the news of this deal first surfaced last week. Here's some points to note. The pandemic's great work from home shift hasn't really boosted Slack's business the way it has for other cloud-based services such as Zoom Video and Shopify. Slack also continues to be weighed down by the perception that it is in a losing race with Microsoft, which has been heavily promoting its Teams workplace collaboration platform. Buying Slack puts Salesforce squarely in that competitive dynamic. It won't close the gap completely, though, is what an analyst from Bernstein writes, as Teams offers features such as video conferencing that a combined Salesforce plus Slack won't have. Microsoft also bundles Teams with its Office software, effectively giving the collaboration service away free. Salesforce will be hard-pressed to match that if it hopes to justify the hefty price tag for Slack. If Salesforce intends to compete directly with Microsoft in the collaboration segment, even more acquisitions will be needed, is what the Bernstein analyst reiterates. Traders will be paying close attention later this week for fresh job reports that will be coming out, which is the NFP number. The ADP report in the meantime on Wednesday showed the job creation in the private sector had slowed. About 307,000 new non-farm jobs were created, marking a drop from October and less than what the economists had been forecasting. In some deal news, Richard Lee is taking a page out of his dad Lee Ka-shing's playbook by further expanding outside Hong Kong. The younger Lee has teamed up with Peter Thiel to establish a $595 million blank check firm that will buy at least one Southeast Asian company. Bridgetown, listed on the Nasdaq in October, will focus on new economy sectors and has begun talks with potential targets, is what is getting reported. Meantime, Bill Ackman's Pershing Square holdings will join the FTSE 100, replacing HomeServe. The fund shares have climbed about 72% this year, boosted by a hedge trade in Starbucks is what's getting reported. Lastly, a word on ETF flows. Equity ETFs have overtaken their fixed income peers for inflows this year thanks to November's epic stock rally. After lagging bond funds for most of 2020, ETFs tracking equities lured a record 81 billion last month, bringing their total haul for the year to about 196 billion. That catapulted them ahead of fixed income funds, which attracted about 17 billion and have a tally of about 192 billion. Investors are redeploying cash into stocks following a series of breakthroughs in the race of a COVID-19 vaccine. Beaten down areas of the market like small caps and energy have benefited the most in this rotation. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.